An article from CNBC highlights that investor sentiment around Chinese EV makers has been improving, and NIO is right at the center of that renewed optimism. Now, if you've followed NIO this year, you know it hasn't been an easy ride. The company's margins were under pressure, deliveries slowed, and many investors had written the stock off as dead money. Some even questioned if NIO could survive long term, especially with how aggressive competitors have been in the domestic market and with Tesla continuing to dominate globally. But now sentiment is shifting. CNBC points out that the recent rally isn't just about hope, it's about heavy trading volume. And that's critical. When you see a stock rising this fast, you always want to check if it's happening on low volume, which can be a red flag, or if it's happening on high volume, which shows conviction. In NIO's case, the volume has been strong, which suggests there's real money flowing into the stock, not just retail traders chasing a quick pop. They also note that NIO is up nearly 40% in just the past few weeks. That's an incredible recovery for a stock that was near all-time lows not long ago. And you have to remember, NIO is still a household name in the EV space. They have the brand, they have a loyal customer base in China, and they're still innovating with new models and their battery swap technology. What they needed most was confidence from the market, and for the first time in a long time, it looks like that confidence is coming back. Now, CNBC didn't come out and say this is the start of a new bull run. They were careful to frame it as a significant short-term surge. But if you read between the lines, the combination of strong volume, consistent green sessions, and improving sentiment does set the stage for something bigger. And that's exactly what we're going to talk about next when we look at the price action, because the technicals line up almost perfectly with this story. So let's break down the charts, because this is where NIO's recent price action starts to make more sense. This is something we have covered in a previous video as well a few weeks back. I was pointing out it's highly likely that a move to the 200-week moving average makes the most sense, and this is exactly what is happening now with this breakout move. However, the move isn't confirmed as a long-term breakout yet. To achieve this, it needs to break the 200-week moving average, which it has not done yet, and this is the point where the most resistance will be for the stock. The key technical development that happened now is that NIO has finally broken above its 50-week moving average. For months, this stock was trapped below that level. Every attempt to rally ended up failing, with sellers stepping in to push it back down, but this time, buyers had the strength to push it through. And historically, when a stock breaks a long-term moving average after being stuck below it, it often signals a bigger trend change. Now, the next big test is already here. The 200-week weighted moving average is sitting right around $7. That's acting like a ceiling for the stock right now. If NIO can push through that level with conviction, it could unlock a much larger move higher. Technical traders call this a make or break point. And why does that matter? Because when you zoom out, the upside is huge compared to where we are now. Back in 2021, NIO traded around $60 a share. I'm not saying we're going back there anytime soon, but it does show the potential range this stock has if momentum really shifts in its favor. Even a move back into the teens or 20s would represent massive upside from today's prices. That said, we do need to be realistic. If NIO fails at this $7 resistance and gets rejected, it could easily drift back down toward the $5 range. That's the risk. But the setup here is really clean. Either this breakout continues and accelerates, or we find out very quickly that it's just a short-term rally. Either way, the next few weeks are going to be critical for the stock's direction. I'm not much of a technical trader myself, really. I mostly trade off longer time frame price action, such as following the 200 weekly moving average, combined by fundamental and financial analysis. That's, in my opinion, how you get to the best investment over time. You can easily apply the 200 weekly moving average in your trading analysis to see if a stock is undervalued or overvalued, because a stock will always return back to this line at some point no matter what happens. So I use it more as a guideline to help when it might be a good time to DCA on my favorite stocks to avoid overpaying. Now, here's something that caught my attention while doing analysis on NIO, institutional ownership. According to the latest data from Fintel, institutional ownership of NIO has now hit an all-time high. That means more hedge funds, asset managers, and large institutions are holding shares of NIO than ever before. And that's fascinating because this isn't happening while the stock is trading at highs. This is happening while the stock has been beaten down near multi-year lows. When institutions tap in like this, it usually means they see value that the broader market is overlooking. They're not looking to flip a trade for a quick 10% gain. These are long horizon investors who are often thinking in terms of quarters or years. For NIO, that suggests they believe the company has staying power and that its current valuation is attractive compared to the long-term opportunity in the EV space. It also lines up with what we've been seeing in the chart. Strong volume during this rally plus record institutional ownership tells me this isn't just retail chasing a short squeeze. There's real conviction behind this move, and that makes me think the breakout could be more sustainable than a lot of people expect. I always like to look at these type of data points because it can be an additional argument to step into NIO stock right now or not. I do think NIO's financials are the only thing really holding it back for me right now. I don't believe the company is in a good spot financially and won't be the coming years. Therefore, I don't see NIO as a good long-term investment right now. I do believe the stock could make a bigger move driven by momentum on a shorter time frame. But as long-term investors, it's good to always be driven by as much data as possible and follow your rules. So now let's look at something that's generating excitement around improving fundamentals for the company. NIO officially unveiled its all-new ES8 premium flagship SUV on August 21st, 2025, and pre-orders are now open. This is the third generation ES8 offered in both 6-seat and 7-seat executive premium variants and a higher trim executive signature variant. What makes the all-new ES8 especially compelling is how it raises the bar across the board. It evolves to a full-size 3-row SUV, becoming the largest battery electric SUV in China, with a length of 5,280 millimeters and a wheelbase of 3,130 millimeters.